Most traders cram their head full of every candlestick pattern they can find, pin bar, doji, engulfing, and yet they still lose money. The truth is that 90% of these patterns are useless on their own, but there are a few, just a few, that actually works if you know where to look for them. And in this video, I'll show you the only 3 candlestick pattern that is worth your time and exactly how to use them to catch trades that looks almost too perfect to be real. I've been trading for years now and tested dozens of patterns, and I keep seeing the same thing. These 3 patterns show up again and again in my best trades, and they work for Forex, crypto, commodities, and even indices, but only when you use them in the right places. And if you want the full candlestick PDF with all my favorite patterns, chart examples, and where to use them, just private chat me with the word candlestick on Instagram and I will send it to you completely free. Now, the first pattern is one most traders don't even talk about, which is why they work so well. It is called the 3+ bar reversal candlestick pattern. This is what it looks like. So we have 3 consecutive candles. The first one is showing strong momentum in one direction. The second one rejects that move either with a small body or a long wick. And the third one confirms that reversal. What is happening here is simply momentum shifts from buyers losing control to sellers taking over, or the other way around for an opposing candlestick pattern. There are different variations of this pattern. So we have the money or evening star, 3-bar reversal, and the shrinking candle. They are all saying the same thing. Now listen to this. This is where most traders get it wrong. I don't care if it looks too perfect. If it is in the middle of nowhere, just ignore it because it's going to go against you. I only trade them when it forms at key supply or demand zone, after a break of structure or a liquidity sweep. That is when these patterns become dangerous in a good way. When you catch it in that spot, you are entering right before the crowd sees what is happening. And since this pattern only works when they are in the right location, I will show you exactly how I draw my supply and demand zone before the end of this video. Most traders get this wrong, and it's why the patterns fail. Now, the second pattern is one that you are more familiar with. You have probably heard of it, but most traders still use them wrongly. I'm talking about the pin bar. Some call it hammer when it's bullish and shooting star when it is bearish. The body is small, the wick is long, and the wick is the real story. It is showing where the market reached, grabbed liquidity, and then completely rejected that price. But again, I'm not looking for it just anywhere. I want to see it form right after a liquidity sweep at a key supply or demand zone, and ideally after a confirmed break of structure. When this happens, this is where it is not just a candle. It's the market screaming, we have trapped traders. Now we are moving the other way. Now, in the example I gave earlier, the second candle in the 3-bar reversal is actually a pin bar, making that setup even stronger. Again, this is important. If you don't know how to draw supply and demand zone properly, you will get this wrong. And I will show you exactly how I draw mine after I talk about the next pattern, which is one of the cleanest confirmation signals you will ever get. This pattern is called the engulfing candlestick pattern. Here is how it works. So you have a small candle in one direction and it's completely covered or engulfed by a larger candle in the opposite direction. A bullish engulfing usually show up at the bottom of a downtrend. That is, the market has been dropping, sellers are in control, and suddenly buyers step in and take over the market, wiping out the previous move. A bearish engulfing, on the other hand, is the opposite. It forms at the top of an uptrend. Price is climbing, then sellers come in hard and flip the whole thing the other way. The reason I like this pattern is because it shows a complete shift in market sentiment. But then again, If I see an engulfing form right after a break of structure at a key supply or demand zone, that is a green light. On its own, it is just noise, but in the right spots, it is a sniper entry. Now, let's clear up one of the biggest mistakes I've seen traders make: drawing supply and demand zone. Most people either draw them too big, so the zone becomes useless, or too small, so they miss the trade completely. Here's how I do it. So step one, it starts with a break of structure. That is your signal something has shifted in the market. Two, I find the origin candle that caused that break, the last candle before a strong move down from supply or up from demand. Then three, make sure there is a fair value gap right after that candle. That imbalance tells me the market wants to come back and fill it. And four, I'm at that candle body and wick, and that is your zone. From here, I wait for price to come back into the zone, and preferably after a liquidity sweep. Then I look for one of the three candles we've talked about to confirm my entry. Now, keep this simple and precise. If your zones are messy, your trade will be messy. And again, if you want my full candlestick PDF with all the patterns, example, just private chat me with the message candlestick on Instagram, and I will send it to you for free. But here is the thing: these patterns only give an edge when you combine them with the right strategy. And the strategy that has given me the most win is supply and demand with break of structure and liquidity sweep. So in the next video, I'll walk you through exactly how to use it to find high probability setup, including the parts most traders miss that can completely flip the result. So click here to watch that video.